Hello and welcome to this week's edition of Mortgage Watch. I'm Ilan Awerbuch of Unitrust Mortgage in San Diego. Yesterday we were up at the offices of a business partner of ours, and walking through their office they had lots of memorabilia of all the U.S. presidents. It was really very impressive. Letters and commendations and awards and bills that various presidents had signed, and it reminded me of the glorious history of our country. It also reminded me of how long it takes to get anything done, as we've talked about in previous weeks. This week on Wednesday, the President finally signed the latest version of the housing reform bill. Now, he had threatened to veto that bill, but he changed his mind because it was the best thing going and decided to sign it. That bill has taken over a year to get out the door. It still leaves a lot of things unanswered and a lot of situations unaddressed, but it's the best thing we have right now, and it's a really, really good start. It does provide $300 billion to FHA to expand their lending. One slight problem is FHA says, hey, we're not ready to lend out that kind of money. We don't know how long it'll take us to ramp up to get that done. And in the meantime, all the states and cities, everyone is kind of doing their own thing of how to address the foreclosure crisis. If you'll see in the news, different cities, different states have different ideas and different thoughts and different actions. It's kind of a real hodgepodge. And it reminded me of that Bob Dylan song that goes something like, something's going on here, but you don't know what it is, do you, Mr. Jones? It's just pandemonium out there with everyone trying to figure out what to do and to solve the situation and how long it'll take. It does seem like it's going to take a while longer, but some of the banks are starting to report kind of a slowdown in their losses, which is, of course, a good thing. And with oil prices having come down, that's really going to help in the long term. Of course, we hear also that Americans are buying less cars, trucks, and anything that goes down the road, so that's not good for our economy. But if oil prices drop, and I think part of it is that people are driving a lot less and being a little more thoughtful about how they drive and where they're going, that's going to help our economy in general. But the bottom line is that the housing market is the engine that drives our economy, and by that, it also drives most of the world. So we're seeing that they're going to have to do more to really get our housing market turned around. In California, one of the state agencies has stepped in to try and buy up some of the foreclosure properties and resell them to public employees and so on. And that's really a very, very good act. Other states are kind of trying to follow suit with that also. You know, a lot of banks have lost a huge amount of money. Earlier this week, Merrill Lynch announced another $8 billion in losses, so they've lost about $50 billion. But you know, you kind of wonder, when they lose the money, does it go down a rabbit hole, or you know, what happens to the money? Lost is a pretty vague term for $50 billion, and that's a huge number. $50 billion is a staggering number. But when someone loses money, probably other firms are making money or will make money. We think the buyers of all of this discounted debt are going to make a lot of money. During the last savings and loan crisis in the late 80s and early 90s, a lot of investors who bought property from the savings and loans made a huge profit, and some of them became some of the leaders of the financial industry in years to follow. So while there's huge losses, there are going to be huge gains. Those gains haven't been announced yet because these people are sitting on the distressed notes, they're sitting on property, but over time it will be alleviated. The problem is it's going to take a few years for this thing to resolve. The savings and loan crisis took 4 to 5 years or more. We're probably going to be at least that long. In the meantime, housing prices have really come down, and there is activity from buyers in different markets. Here in San Diego, we're seeing that for sure. Among the features of the new housing bill is a new federal agency that's going to oversee Fannie and Freddie and a lot of other functions that they're trying to centralize. Up until now, there have been quite a few different agencies involved, and these were agencies that were created, let's say, 50 years ago. They can't really respond to modern times. With the modern age that we have in the technology, if somebody has an idea in Brazil, the next morning someone is already doing the same thing in Los Angeles or in Tokyo or in Riyadh or other parts of the world. It's a total global economy and a total global communication scene, and that's why this crisis has spread far and wide. But we do see also that things are starting to solidify. There's a lot of foreign banks and foreign investors also coming here to do business. And that's not a bad thing. When people invest here, it's a good thing that money is coming in. We're also seeing that, you know, with the dollar and the weakness, U.S. exports are really rising. So, you know, long term there is hope and not necessarily, you know, hand-wringing. But For the people involved in foreclosures and in losses, it is a staggering time, and our hearts go out to them. A lot of people are also looking at what's going to happen with the sale of IndyMac Bank. As we reported, and as you know, IndyMac Bank had a failure a few weeks ago. They have a very, very large and successful reverse mortgage division, financial freedom, and probably they're trying to sell the whole institution as one. So that should be resolved here in the near future. One thing about the nature of our country is that the events that go on are huge, they're staggering, but we have systems in place, and that's what sets the U.S. apart from a lot of other countries, is that we have very, very effective mechanisms that are put in place. Fortunately, they're not tested real often, but when they are, they do step in. The IndyMac failure was a very, very smooth transition. They came in Friday afternoon. By Monday morning, the bank could reopen. And really, except for the news about the Feds taking over, there was no difference to anyone who was banking there. People could get their money and everything else. Now the Fed is looking for a smooth transition in selling the bank. And yes, it is going to create some losses. But hey, we have a deficit of close to $1 trillion. So what's a few $billion here and there in the greater list of stuff? And other news this week, in the housing bill, the FHA is also going to stop taking no down payment loans or gift loans. So that's going to tighten up the housing market, and we'll see what the latest venture is going to be to keep buyers. One thing that was happening that builders were showing is that with housing prices having dropped, a lot of buyers could qualify for FHA loans. That's a good thing, and if they're buying houses, that's a good thing. So hopefully between now and October, there'll be some relining of how this bill is being interpreted so that FHA is able to keep providing loans and get first-time buyers into property. Well, that's all the news for this week. Keep your head up, stay positive, live within your means, and we look forward to joining you next week on Mortgage Watch. I'm Ilan Awerbuch of Unitrust Mortgage in San Diego. Thank you.